Hi everyone, welcome to this Educate Fitness YouTube short where I'm going to take you through this financial planning template. Okay, so as we know, we need to be able to complete a financial plan, a budgeting plan or a financial budget if we want to work as a personal trainer on a self-employed basis or as a limited company. So we have created this financial planning template which will help you. This template considers that you are going to be working on a self-employed basis. So let me run you through this. First and foremost, the link to this financial planning template is in the comments below. Once you click on the link, this will save to your Google Drive, so you will need a Google Drive account. They are free, so just create one and you're away. And we basically have 4 tabs along the bottom. As you can see, there's a monthly P&L, the quarterly P&L, the cash flow, and there's a small reference section that we're going to add to as we go. First and foremost, let's look at the monthly P&L. Now, the thing that's important here, anything white you don't need to touch, you can't edit, but anything in this light yellow, this pale yellow color, this is what you can edit. And as you can see, it basically splits every month down. We've got January all the way through to December, and then the final column here is for the total year. And we split it into 3 sections. So we've got the sales revenue, we got the costs, and we've got the profit and loss. All right, so let's run through how we can build this out and show you the principles of getting started. So let's say you start working as a PT from the 1st of January. So when we get started, you're basically going to have 0 clients. All right, so we're going to pop in there 0 clients. If this is next year and you've been in business quite a while, you can change that to however many clients you've got. But for now, let's say we're going to start with no new clients. So how many new clients do we expect to get in the first month? And to be honest, for this, I'm going to just populate this. I mean, you can change it depending on peaks and troughs, which I do recommend you do. But for the purpose of this exercise, I'm just going to use the same numbers. So let's be conservative and let's say that each month we expect to get 5 new clients. All right, so the renewal rate I'm going to cover in February because we're not going to have any clients renewing. It's something that we need to sort of consider, how many of our clients are going to stay with us. But because it's January and we have 0 existing clients, we're going to ignore this renewal rate. Same with lost clients. But what this has done, the spreadsheet has calculated that we're going to have 5 new clients. When we move on to February, obviously it's taken the amount here and we've got 5 clients. All right. We're still assuming that we're going to have 5 new clients, and now is where the renewal rate comes in. Now, once you've been in business for quite a while, you'll be able to calculate your own renewal rate. Obviously, the percentage of people that stay with you, the percentage of clients that stay with you. And let's assume here a decent renewal rate will be 80%. So what we're saying is you got 5 clients here and we're expecting 80% of them to stay with you, which is what you want. Obviously, good service, helping clients meet their needs. You're going to have a higher renewal rate. So what the calculation is going to do here, based on an 80% renewal rate, it's assuming that you will lose 1 client, meaning that you've now got total clients of 9. Which is basically existing clients from last month, plus your new clients of 5, so that's 10, and we're taking away the lost client. And as you can see here, that's 9 clients. You've now got a total of, you're now working with a total of 9 clients by the end of February. Same principle. We're carrying over the 9 existing clients here. We're saying we're going to get another 5 clients, which is 14. Now this 80%, it's going to calculate based on these 9 clients here. So 80%, it's about 1.8, 1 point whatever, but it's always going to round it down for you. So again, we're assuming we're losing 1 client. And the total number of clients we're going to have by the end of March is 13. All right. 9 clients plus 5 is 14, minus the one that we lose is 13. And it's the same principle. As you can see, your existing clients is going to be building up. Obviously, you're going to start losing more clients because of the percentages are working on bigger numbers. And by the end of the year, you're going to be working with 25 clients. As I said, you can change these. If you want to put, let's say you put a lot of marketing spend here and you expect to get a bit more, a few more new clients, then you can change this this yellow section here and it will amend all of the details. But now let's keep it there. As you can see, let me give you the example. Let's say we only retain 50% of our client base. All right, look what it does to the numbers. It really takes the numbers down. So this is this renewal rate is really important. It's something that a lot of PTs, a lot of businesses sort of ignore, but I think it's super important. Renewal rate is also a success rate of how you're doing your business. If you've got a renewal rate of 50%, then you need to look at why. Why are you losing clients? Keeping an eye on your renewal rate means that you answer important questions. Why am I losing clients? What am I doing wrong? How can I improve? And who can answer these questions best? Or the people that you're losing. When people say they no longer want to be with you, try and hold an exit interview with them. Try and find out why. Now that's for another video. All right, so this first section, we're just basically talking about our client base. Next, we need to work out two things really. We need to work out our our average client hourly rate. So what we're going to charge. So let's say here we've just started and we're going to be quite conservative and say that it's going to be £30 per hour. Then we need to work out how many hours training one client on average will have. Obviously some clients will want to train with you more per month, but some clients will want to will not have that time and they might want to do, you know, one session per week. Some will want to do 2 or 3 sessions. Some will only do 1 session per week. But again, I'm going to keep this conservative for now, just for example purposes. So let's say the average client wants to train about once a week, so we'll say around about 4 times per month. Now, as you can see here, what's happened here, based on all the information in your client base and also the revenues, what you will charge the client, it's populated this row here, row 11, which is total revenue. As we can see from the calculation, that's basically taking your total number of clients and it's multiplying that by the number of average hours per client per month by the hourly rate. So considering all that, that's expecting a total revenue of £600. It's populated the whole year. All right, so we start off around about £600 as our client base increases. Total revenue is £3,000. Now, what this does is, as I said, it allows you to manage your business, work out how you can improve. So, if you've only got if your average here per client is 4 hours per week, which is roughly 4 hours per month, which is roughly equates to 1 hour session per week. Maybe we want to try and improve that. All right, because if we can do that, if we can double that, get them to do two sessions per week, that will double that there. And you see what it's done to the revenue for the annual. Your annual total revenue, total cash in, is 53,000. All right, so these are the little things that you can look at. And these are the little principles or the variables that you can work on and change to ensure that this number here, your total revenue, will increase. I've knocked it down to 4 for this example. 4 hours on average. We're saying a client will train with you for 4 hours per month. Average client hourly rate is £30. Again, we could stick that up to 50 and look at the changes. These are all variables that you need to be working on to ensure that this number increases. So we have our total revenue. Next, we need to consider our costs. All right, so what are the costs? So let's say in this example, I'm a freelance personal trainer. Everything I earn is my own. I just need to pay a gym cost. I've got a local membership with my local gym. They're happy for me paying £50 per month. I need to get some insurance. Now, you normally pay insurance in one lump sum. Again, can range from anywhere between £80 to £200. Make sure you get the best cover. For now, I'll just say it's £100, so I have to pay that annually. I'm going to pay that in January, £100. Next, we've got to consider travel. So just for this example, I'm going to put my travel is going to be £10 per month. The majority of my clients come to me. I don't need to travel to them. Next, I need to consider some courses, some CPDs. So as a PT, the industry is constantly changing. I want to be educating myself. I want to be seen as an expert, the go-to person in the field. So I'm going to spend some money on myself. So twice a year, I'm going to spend some money on courses. All right. 200 in June. I'm going to do 200 in December because it's Christmas, quiet time. I'm going to use that time to train myself up. Next, we're going to look at some clothing. Again, it's a difficult one. You might want to put the full amount here, but I'm going to allocate £50 per month into clothing. Advertising is a big one here, and again, I'm going to go with £50 a month. Again, if you feel like January is a busy time, right? Just after Christmas, everybody wants to start personal training. They've had it's New Year's resolutions. You can bump that up, all right? But if you bump it up, then you would expect these numbers to change as well. All right, so whenever you look at something like advertising, you want to see some return on your investment. This £200 investment, what's the return? Well, it might be another 5 more clients, or 10 in total. All right, so these are the things that you've got to look for. Next, we've got equipment. What equipment do we need? Let's just say we're going to need some startup equipment, some blood pressure monitors, so on and so forth, totaling £300, some calipers. Next, we got stationery. So within stationery, it can include books, notebooks, it can include pens, it can also include stamps, postage, admin costs as well, I'd stick in there. For this example, let's just say 20 quid per month. And then this was an important one, right? IT costs or software costs. So this, if you need to buy a computer, if you need to buy a mobile phone, if you need to buy, which you probably will, you want to buy a subscription to one of the one of the PT subscription packages, which help you manage your client. Let's say that's £50 per month. Obviously, there's different packages, different softwares out there, so you need to get the one for you. A lot of them depend on how many clients you have. So again, this is something that you can plan, do your research. And one thing that I've missed there is mobile phone costs. If you can't get a decent mobile phone for £30, there's something wrong. I'm just going to leave these as is for now, and you can add some costs that maybe I forgot about as you go. But as you can see here, what it's doing, it's going to calculate the costs, and you have your cost per month. And then ultimately you've got your cost per year. Next, we need to look at our profit and loss. So first and foremost, we look at profit and loss before tax. So here we got total revenue. Let's start with total revenue of 600. Total costs, well, we're actually going to lose money this month. So that's 660 total costs, which means a profit before tax is minus £60. All right, that basically means that you're going to have to invest some money into this business initially. As things stand, £60 you're going to have to invest to get cracking. And then from February, you're going to start earning some profit here. As you can see, the profit before tax, we're looking at 22.4K. Divide that by 12, roughly 1.8 thousand per month, if we share it equally. Next thing we need to do is work out our tax and national insurance. Now, There are calculators that help us do this, so let's not go, let's not get too carried away trying to work out fancy formulas which potentially normally go wrong. So in here we've got a reference, so all you need to do is go to this government website. All right, click Start Now. Wherever you're based, whether it's Scottish, Scotland or UK, I'm going to click on UK because that's where I am. So it's asking here, this is self-employed ready reckoner for UK taxpayers. Enter your estimated profit. So we're going to answer both questions here. So estimated profit, we're going to take from here. And it's this number here, the profit before tax, £22,400. Take me back here. I'm going to copy it into there. Sorry, it's asking for the weekly or monthly. My mistake. Glad I did that so you don't make the same mistake. This is why we have this number here, shared equally. All right, so this is saying that, which is basically 22.4 thousand divided by 12 is giving us this number, 1,866.67, rounded down or rounded up. We pop that in there for the monthly. We select weekly or monthly. Well, we just said it's monthly, so we click that and then select calculate. And this is basically going to give us our monthly tax and class 2 and class 4 national insurance. All we need to do, because this is monthly, we want to take the yearly. So this is actually the column we're interested in. So I'm going to copy this number here, 3279.48. I'm going to come back here and I'm going to simply paste the values. That will then populate this number here. And we've just simply divided that by 12 for planning purposes. Now the spreadsheet actually divides this number by 12 just for planning purposes. As you can see, this number then looks a little scary because you think profit and loss after tax is 333.29. But don't worry about that too much. You will pay your tax in one go at the end of your tax year when you do your tax self-assessment. This is the number that you really need to be considering, which is the before tax, profit before tax, which is £60. As I said, you would need to invest that into your business, into your PT business to get started. And to be honest, to get started, you might need to invest a little bit more because it might take time throughout January to get this much money. But this is giving you a breakdown per month. And that's it really. What it does then is it will calculate your final profit and loss after tax per month. And based on these numbers here, which are quite conservative, we're saying that you're going to be earning £19,120.52 after tax. What's important is that you save money, all right, for tax and national insurance. Make sure you don't spend it because you do have to pay the government and they do come chasing it. And that's your monthly P&L. Now, breaking it down, when it comes to reporting it, we tend to report it on a quarterly basis, and that's basically what this sheet does here. It looks at the sales or revenue, it looks at the total costs, profit before tax, and the important profit and loss after tax. Quarter 1, we're looking at profit and loss of 1.2 thousand, or just under 4.5 in Q2. Q3 is 6.3, and then 7,000 in Q4, and we're looking for a total annual profit of 19.1 thousand. Next, we need to consider our cash flow, how much we've got in our bank. Now, we can do this on a monthly basis, but again, it's normally reported on a quarterly basis. The main thing you need to be careful of here is this is basically your cash flow year one, January of year one, minus 60. So you need to make sure you have enough to cover this amount here. In terms of cash flow, we cover it by year. All right, so this is basically telling us how much cash we're going to get in, how much cash is going to go out, which basically gives us the total amount we have in the bank at any one point. Obviously, from this amount here, this is cash in bank, bearing in mind that you've not taken anything out. So you might want to consider popping, paying yourself something. So what we'll do here actually is let's create another row. And we'll call that personal pay. So let's say based on this, we want to be quite conservative. We pay ourselves, 500 quid per month here. Okay, let me just make sure these formulas work. They will work on your version. I will have updated it all, so please don't worry about that. Yep. So we got cash in, cash out, what we're going to pay ourselves. It leaves us with £560 in the bank. Quarter two. Here's the calculations. So it's taking the 560 we got in the bank. We're adding the 6.4 that's come in. Cash out is 1.1 thousand. And that's saying the cash in the bank was 5,000. But we're going to pay ourselves a little bit more here. Let's say 1,000 per month. Totaling 3,000 for the quarter. And the cash in the bank is starting to increase. We're giving ourselves a bit of a buffer, 2.8 thousand. Same principle here. We're considering the cash in, cash what's going out. That would say we got a total of 10,000 in. So we want to pay ourselves a little bit more. Let's say we want to pay ourselves 2,000 per month, which is 6,000 per quarter. We're still seeing our cash in bank increasing, which I always think you need to have some kind of buffer. I think it's a good thing. And then by Q4, let's say, what do we want to pay ourselves? 3,000. It's a little bit much that, because that's going to really hurt us. Our cash in bank's going to reduce. I think if we can get to about 5,000, that would be great. Let's say we pay ourselves what? 1,500 times 3. Sorry, what am I talking about? 2,500 times 3. And that's going to leave cash in bank of 4.4. Now, why is this important to have cash in bank? And why have I done it so that we have 4.4 by the end of the year? Well, let me take you back here. Remember, at the end of the year, we're going to have a tax liability of 3.2 thousand. All right. So by the end of this year, quarter one or quarter two of next year, you're going to need some money in the bank to make sure you pay this tax liability. Now, to be honest, that's not given much breathing space. So you might want to consider how much you're paying yourselves. And don't forget, these numbers were quite conservative, so they are on the lower side. But this gives you an idea. This is the principle I want you to understand. And that's it. All right, this is going to help you, start off your personal training career, how to do the financial planning, how to manage your business, how to use KPIs. These are KPIs here, right? Key performance indicators. You need to plan based on these. You need to work around it. If you're meant to have total clients of 13 and you're not achieving it, you're down at 10, then something's wrong. So you need to look at what actions are required to achieve these KPIs. Don't be afraid of KPIs. I know they have a bad reputation in some cases, but KPIs are never the problem. Sometimes it's the management of KPIs. People use them as a stick to beat people with, and that's not the case. What we need to do is to work out. So if we want to get new clients, the KPI is 5. We need to work out what actions do you need to do to ensure that you achieve that. And that's how to look at a KPI. All right. Always, what actions do we need to do to ensure we achieve this KPI? Same with 80%. What do you need to do to ensure that 80% of your clients renew? All right, it gets you thinking about, okay, what service do I need to offer? How do I need to be seen by my clients? And that's it. Hope you enjoyed the video. Give it a like and comment in the boxes below. If you haven't already subscribed, please also do that. And ask any questions in the comments. Get in touch with me. We're always here to help. But thank you for watching, and I hope you found this useful. I'll see you in the next video.